Vendor financing is a method where a supplier provides credit to a buyer to help them purchase goods or services. At its core, this is a form of credit extended directly by the seller rather than a traditional bank or lender. Often, these deals come with 0% interest for a limited time, making them a very attractive option for cash flow management. The process is straightforward. You receive the goods now, but pay the invoice over weeks or months instead of all at once. Unlike a bank loan, vendor financing is usually easier to qualify for because the seller is motivated to move their product. By spreading payments out, a business can preserve its cash reserves for other essential operations like payroll or marketing. Remember that while it is a convenient tool, you must always check the contract for hidden fees or high interest if payments are missed. Vendor financing can be a great bridge for your business. Subscribe for more finance basics, and remember, this is for educational purposes only.